All right, I wanted to share something that we went over today on the live stream regarding breakouts and why I trade breakouts the way I do. I do use a very tight stop loss. I do not have a big risk tolerance. So chasing breakouts is just really not feasible in my trading. Price can retrace so quickly and easily, and when you're tracing a breakout, you're not giving yourself the best price possible with the lowest risk of downside. So as we look at today's breakout trade here, number one, we're sitting on structure support. So that's one reason why I'm looking at this breakout to the upside, which should have a little more conviction. Now eventually what you see here is we draw the trend line in that I'm looking to break out of. Okay, and then price, as it pops through the trend line, what I oftentimes see is a slight retracement, almost like it wants to fake out and then pull back in inside the trend line, making it look like a less probable breakout. So what I found is that when I allow it to pop out the upside of this trend line, I simply wait for a retracement back inside the trend line. What I'm looking for is to pick up some of that volume that was happening inside of that consolidation. So as you can see here, price breaks out of the trend line but immediately retraces back inside to about 50% of that big green candle, and that's where I'm looking to get my entry. So I end up going long after the retracement, not chasing the breakout because I know there's too much downside risk. And if I chase the breakout itself, I have a high probability risk of getting my stop loss hit. So by allowing price to retrace a little bit, I give myself a better entry price with a lower risk of my stop getting hit. And in this case, it was a really good example of price retracing back in, picking up that volume, and then making its run on the breakout. You can see that volume spike after the retracement. Again, it wasn't during the breakout. This was after the slight pullback, picking up that volume, and just look how hard that candlestick pops. 1 or 2 seconds and just an immediate poke to new high, which of course brings in a few sellers in the retracement. I end up bailing because I'm more comfortable scalping trades and letting them run. But in this case, with such a bullish up day, bullish up leg, bullish consolidation, this ended up making a beautiful run. You know, I'm happy with taking the scalp trade on it. I took good profits, but as you can see by the chart, it would have given us a lot more there. So if you're a breakout trader, you end up getting stopped out a lot, consider this. Obviously, you're going to miss a lot of trades. You're not going to hit every breakout. A lot of times, price will just pop out and run. But if you're a low risk trader like I am, you can consider letting the initial poke, waiting for that retracement, and then letting price launch out, ultimately giving you just a better price. Still gives you the majority of the move. No matter how many trades you miss because you didn't get in on the breakout, that's pretty irrelevant to me. I want the highest probability trade possible, and for me, that is a pullback, picking up the volume back inside of that trend line. It's not for everybody. It is just the way I prefer to trade them. Hopefully it helps you in the future, and if it does, don't forget to stop by and see what else we're doing.